right, October update, here we go. We've been talking for a couple months about how the frantic price declines have slowed down here in the Fraser Valley and the Greater Vancouver. It seems to be a bit more of just like a slow grind, and even some areas have completely caught themselves and haven't even budged since July. Places like Brookswood and Langley, if you bought a house there in July, you could get like an unrenovated box for 1.15. And those same boxes are still selling today. What is that, like 4 or 5 months later for 1.145? Brookswood's a really interesting case study because they had 11 months of detached house inventory in July, which is super high. That means it take 11 months for all the listings to sell. Whereas now it's only 3.2 months. So all the inventory would sell out in like 3.2 months in Brookswood right now. So certainly you've seen some of these areas catch themselves.
Yeah, overall, the median price for detached houses in the Fraser Valley actually went down $17,000 in October. And then they went up $26,000 for the Greater Vancouver in October. But it's really difficult to take these broad-based stats in the market and apply them to everywhere.
For example, if you want to look at the townhouse market in Langley versus the detached market like we talked about, townhouses are down about $150,000 since July. And that's because there are some new developer projects in Langley. If you've driven through there, you know that like the Willoughby area is just slammed with new development, tons of new projects that are getting delivered. And the developers, they're building these projects. You have these massive construction loans out. It's too late to cancel it. They have to sell these townhouses. And so they're lowering their prices. And then what's even causing more price decline in the market is you have people who bought, say, a year or 2 years ago, these townhouses in Langley. Now they're coming up to complete within the next couple of months, and they're not able to. Either lots of people bought another house in that meantime, they're holding two properties, or they never sold their other house. They have to sell one now. They didn't expect the prices to come down this much. Or the payment's just too high, they're going to rent it out, but the rent doesn't cover the mortgage. So you're running into a lot of these people, they can't complete and they need to sell it. And people are looking at that, they see blood in the water. For example, we just saw a 4-bed, 3-bath townhouse in Langley sell this week. Double car, side-by-side garage, corner unit for $761 plus GST. That's like $799. And you have developers trying to get almost $1 million for these right now. So there's like a $233,000 gap between if you buy the same townhouse assignment from a distressed seller or from a developer, and you get to choose your unit and that kind of thing. But for $233,000, 22%, I mean, just take the assignment. That's a massive, massive gap. And that's driven down resale prices in areas like Langley.
So only 12.7% of detached homes sold in the Fraser Valley in October, 22% for condos and 25% townhouses. So detached is slow enough that if seller lists to attract other offers, oftentimes they only get offers at asking or below asking with subjects.
Yeah, and so this is actually a little bit of an interesting case study. We had a multiple offer situation this week in Abbotsford for our buyers, and the sellers, they listed about $25,000 below the most recent comparable. And we were actually able to get that property competing against 3 other buyers for $25,000 below the most recent sale. So even though they listed low and got multiple offers, it still didn't go subject free and it still didn't go for market value. It actually went a little bit below it. And that's an interesting market where it's like around a 12% selling ratio in Abbotsford right now. It's kind of like a buyer's market for detached. Versus we're in a multiples offer situation in Burnaby on a condo, a 1-bed condo, which is currently like a 40% selling ratio. What happened was there's 4 offers and the property sold for about the price that it should have in line with recent comps. So it didn't go under. And it went over asking, but still not subject free, although there was a subject free offer in the mix. So what we're seeing is that how hot a market is determines how well that multiple offers situation goes. It's almost like in the slower detached markets, 3 buyers kind of make a pact. They're like, all right, we're all going to offer on this property and may the best man win or woman, but nobody's paying market value. Like we're all offering below, may the best person win.
So we all know price is simply a supply and demand equation. If there's too many homes available for the amount of buyers, prices will go down. So to illustrate how non-eventful our inventory increase has been, let's compare Vancouver to Phoenix. So the increase in active listings from March 2022 to October 2022, Greater Vancouver is at 21%, Fraser Valley is at 12%, and Phoenix is at 337%. So that's when you really start to get worried, when active listings are tripling in just 6 months.
Yeah, that's absolutely
crazy.
Outrageous.
So we'll probably see some areas and home types start to grind down a little bit further this winter as sales volume gets slower due to seasonality, but inventory should stay relatively tight, except for possibly the new condo segment.
Yeah, it's really submarket dependent. Like we said, detached in Abbotsford, every sale kind of seems to be another opportunity for buyers to get a little bit lower. Then you've got like places like Burnaby. If the submarket doesn't have a lot of good product, well, there's 4 buyers sitting there waiting for that condo. Then you got places like Willoughby with all these distressed assignments coming on, and those prices are getting hurt as well, and inventory is growing in those areas against the trend of townhouse and detached where inventory is shrinking.
The spring is going to be a large influx of new inventory. This happens every single year, and it could be possibly exaggerated this year by a large portion of sellers deciding to wait to hold off into the spring or take their property off the market and relist it in the spring. We hear it all the time from people. Owners in Vancouver have been conditioned to believe that downturns are only last 6 to 12 months. And
2008, 2016, 2018, every single downturn is just a blip for 6 to 12 months, and then the market came roaring right back. So people are used to this now. It's been like 20 years of, we just wait 12 months, market gets better. So I don't know. Is that going to happen this year, though? I mean, in the spring, we're going to probably see variable rate mortgages at 6% or higher, which is even higher than they are right now. 5-year fix is probably going to remain in the mid-5s where it is right now. And we're probably not going to see rate cuts until early 2024 is the forecast right now. So all of 2023, we're going to see these high rates, these payments that are 75% higher than 2019. Buyers they're not making 75% more than 2019. They can't, the average person can't afford this. That's why our sales volumes right now are so low, 30 to 50% below the 10-year averages every month. And I think we're probably going to see sales continue to be significantly below the average, 25% plus below the average through the first 6 months of next year. So it could be that kind of slow grind down of prices from here. Or maybe not. Some areas are super tight in inventory. So it really is going to be submarket dependent.
So the question is, will sellers be better positioned for listing in the spring? It's kind of hard to say the conditions are going to improve. If I was trying to sell my house right now, would I wait until the spring to list it? Probably not.
Yeah, there's going to be a large influx of inventory, more competition, right? At least right now, it's low inventory for most segments. In the spring, you might have like 4 of your neighbors decide to list too, and then you're all sitting there. Nobody's buying. Well, some people are buying, but not many because the rates are still high, and then you're all competing with each other and hack.
So stats are cool and great, and we all love them, but how does it actually feel to be in this market right now? It's not fun for a buyer or a seller. Sellers often have to wait 30 to 90 days for a decent offer. And during this entire time, they're feeling like the market is sliding underneath them, and it quite possibly could be.
Yeah, and you're sitting there, you're showing your house, people are coming, maybe you have 30, 40 showings a month. It is painful. For buyers too, it's not super fun because there's not a ton of inventory. Something good comes up and it's nicely kept and a decent price. Maybe you're competing against 2 or 3 other buyers now. So buyers aren't having a great time either.
No.
Although I will say in those multiple offer scenarios, oftentimes, like we said, in the slower segments of the market, it's still going under ask. And something else that's absolutely brutal right now is the inspection. There's literally 2 negotiations. Getting the offer accepted, and then the buyer usually has 5 to 10 days of subjects, and then they go to an inspection on the home. We're getting this huge list of the tap's loose and look at this little scuff in the wall, whatever. It goes on and on and on and on. And buyers are making crazy demands for, hey, fix everything, just send the whole list. And usually it's not like that, but the buyers right now, they get an offer accepted and then they start to move through this due diligence period. And then, they're literally just sitting at home and they're watching the news. And the news is real estate prices are going down 20% next year. They're like, what am I doing? Oh my gosh. And then for them to actually feel good about removing subjects, they often found they got to get that pound of flesh from the seller. And they do that often through the inspection. So inspections are really tough right now as a seller. It's a second negotiation. It is entirely a second negotiation oftentimes.
Yeah. So inventory and new listings still remain below the 10-year average. However, one segment is busting out of this trend, and that's new condos. Areas like Willoughby, North Surrey, and parts of Coquitlam and Burnaby that all have a lot of newly built condos are seeing an influx of new listings, often assignment sales that people can't complete on due to high interest rates, or newly completed condos that just have deeply negative cash flow. Some of these buildings have 10 plus listings that are selling right now. We're seeing opportunities coming soon in this segment, and it's definitely the most vulnerable part of the market right now.
Yeah, we were looking at one building in Langley for our buyers, had over 15 listings, and not a single one had sold in over 90 days. Yeah. So these people are starting to feel the pinch, and the buyer pool isn't there to absorb these units. In some of these newer projects quickly. Definitely, there's going to be some big price cuts. And this is essentially why condo inventory is remaining getting elevated versus detached and townhouse, which is visibly shrinking. At the end of the day, it always comes down to leverage and vulnerability in real estate, and condos are where people take out HELOCs, they take out multiple pre-sale contracts that they can't complete on, and they just go too deep and too risky versus, houses and townhouses tend to be people who just sit there, they live there, and they pay their mortgage, and they didn't put themselves in a risky situation. So the inventory levels are holding there. I've actually talked to multiple people in the last few weeks who are what you could call, I guess, bag holders. Not my clients, but other people's clients. And they have two properties, usually a pre-sale and a home that they had before. And they were holding them both, just expecting, it's Vancouver, market goes up. And now the prices have fallen so far on both these properties, they're forced to sell one of them, usually because they're on a variable mortgage as well, and their payments continue to go up. One person I was talking to was like negative $1,400 a month, negative $1,400 cash flow every month on their investment property. And they tried to sell it earlier this year, and now they're down like 25% because they didn't cut the price fast enough, and now they're just trying to ride it out. So there's a lot of this going on. You'd be surprised, even from realtors too. And what's really interesting too is not only the listing volume for condos, it's actually the sales volume as well. And what you can see is earlier this year, as the slowdown started, like detached in May just got hammered immediately. Sales are 49% below the 10-year average in May already. They were only 53% below the 10-year average. Only is a big word for that. But it was pretty much the same May to October for detached, both about half of the 10-year average, whereas condo is still above the 10-year average in May and has been slowly declining for sales volumes every single month on a seasonal average. And now we're like 25% below the seasonal average for condos. So not as inventory building because of new listings, but sales are also declining every month. And we're not entirely sure why that is, but my guess would be investors probably continue to be removed from the market as they watch the news. And also first-time buyers reacted slower to interest rates because at the beginning, when rates went up, you could still get insured mortgages for quite low, and the stress test wasn't actually that different, probably up until I would say a couple of months ago. So I think first-time home buyers, even though the payments were up a lot, they're still able to afford quite a bit, and they were moving forward with those decisions still.
So the Bank of Canada raised interest rates 50 bips this month, surprising to the downside when most expected 75 bips. The US Fed, however, did do the 75 bips. So the narrative have now shifted from getting inflation down at any cost to balancing inflation and the economy.
Yeah.
This is not quite a pivot yet, but certainly a change in narrative.
Yeah, definitely a change in narrative. Next Fed meeting's on December 14th, and it's kind of a 50-50 split right now between whether it goes 50 or 75 there. Actually, just today, they released a CPI inflation data, and it came in quite lower than expected. So that expectation probably got revised downwards. Yesterday, we were looking at like a 5.25% terminal rate for the US still, and like a 40% chance of 5.5. So Canada usually finishes about 75 bips below them. So maybe we'd have like another 75 bips to go here in Canada. Maybe it's like a 50 next meeting, 25 after that. States could be like 50, 25, something like that. So it'll be really interesting to watch. This stuff changes all the time. Like we said, new CPI today was a total curveball.
So a lot of people have in their mind that this is going to be a V-shaped recovery similar to that of COVID. And that would mean that inflation has already peaked and it keeps declining. And then rates peak this spring and slowly start declining into the beginning of 2024.
Yeah, and then 2024, hopefully everything recovers, this rosy picture where it kind of dips for a year or two.
Yeah.
And well, my goodness, I sure hope that's the truth because real estate sales are pretty much a direct function of what interest rates are doing. It hasn't always been the case in the past. If you look at this graph from 1979 to 1982, you can see that it took a few years to get this big inflation bout under control back then. And not only was it inflation was this big curve and then down, it was this, and then we thought we had it, and then it went again, and then they thought they had it, and then it kind of went again, right? So what could end up happening, and I think we got inflation under control, and then we pause, party's back, S&P jumps up like 25%, and then we hit June next year, and all of a sudden, like the CPI numbers start creeping up, and then July it's up, and then and then rate hikes again. That's what's happened in the past. Whether or not they just kill it once this time remains to be seen. That would be ideal. Like inflation just kind of trends down from here. But we could be doing kind of this stop and go for the next few years, which wouldn't be great.
So lastly, just taking a look at where our mortgage rates are right now. 5-year fix is around 5.5%. Variable rates around 5.7, and 5-year fix for rental investment properties is around 6%. If you have any questions about what we talked about today, feel free to hit us up, either send us a message or give us a call. We're always happy to chat.
And we are taking on new clients. If you guys do want to buy or sell in the greater Vancouver area, we'd be happy to help you with that. Like, subscribe, comment, send to your friends. Thanks for tuning in.